Hello, and welcome back to the Fintech Takes podcast. Today, I have a very special episode for you, a conversation with the CEO of Marqeta, Mike Milotich. Mike and I recorded this live from Money 2020 in Las Vegas, Nevada, which is always a crazy time, but one that I really enjoy the opportunity to get to speak to people in person, particularly Mike in his new role as permanent CEO at Marqeta. We talk about his vision for the company. We talk about buy now, pay later and the evolution of payments as a form factor. We talk about what's happening with consumers and small businesses, which Marqeta has a really interesting lens on through the work it does with its customers. And finally, because it's Money 2020 in 2025, we of course talk about AI and the rise of agentic commerce and Marqeta's view on that topic, which is very interesting and very different from how I've heard a lot of other companies talk about that topic. All that and more in an action-packed episode recorded live from Money 2020. Here's my conversation with Mike Milotich. Mike, thank you so much for joining me on the podcast.
Thanks for having me.
Well, it's a delight to do this in person. I feel like podcasts always work better when you get to sit in a beautiful setting like this. So appreciate you taking the time. First, congratulations on now being the permanent full-time CEO of Marqeta.
I appreciate that. Thank you.
Yeah, absolutely. I think we should start there. I'm curious, obviously, you're not new to Marqeta, previously serving as CFO, but now that you're in the CEO role on a permanent basis, just be curious for your take on kind of where the company's at today and kind of the vision for moving forward.
There's so many exciting opportunities and dynamics going on in the payments industry, and Marqeta tries to be on the forefront of many of those things. Yep. Our vision is to enable payment possibilities. And what we've really prided ourselves is being the enabler of innovation. Mm-hmm. So as a very modern platform that has a lot of different capabilities and is highly configurable, we provide the building blocks for our customers to put together in unique ways to deliver, embedded, engaging value propositions to their users. Mm-hmm. And so what we really tried to do is give our customers more control and agility in issuing payment credentials to their users to deliver unique experiences.
Well, it's one of the things we were talking about before we started recording is just this balance that I think that requires between sort of scale and agility a little bit, right? And as we had been talking about, payments is a volume-based game, right? Like you have to have a certain scale to be able to make things work, to be able to sort of assemble the right pieces. But at the same time, there are a lot of at-scale payment providers that just don't really move that nimbly anymore, and that can't be sort of the choice of innovators. How do you think about striking the balance between those two things?
We're fortunate in the sense that we were built in the modern age. So we are 100% modern platform, cloud-based, all API driven. So that gives us a huge advantage. And then we're now quickly approaching 400 billion of annual payment volume. So we also have the benefit of scale. And with that also comes experience and having seen things that worked well or didn't work in the past and being able to apply that going forward. And so the way we balance those two things is by continuing to make sure that our platform, that we can do both. Mm-hmm. And it's a big part of our strategy is you don't have to make that trade-off or sacrifice like you've had to make in the past. We can maintain a highly flexible and nimble platform that is also delivered at scale, that can work or is enabled in over 40 countries and can do credit and debit and consumer and commercial all in one place. Mm-hmm. So one of the things that also made things challenging in the past is you might have to have multiple providers to do these things, which also made it increase the complexity a lot for our customers to deliver value to their end users. Yeah. And on our platform, because it's one flexible and at scale platform, a lot of those problems don't exist if you work with us, which is what gives us a big advantage in the market.
Yeah, no, that's fantastic. And I'm glad you mentioned kind of the flexible building blocks, because the other thing that I really have been curious about, and it's something else we were talking about before we started recording, is just this idea that like the nature of payments, in some senses, it's kind of permanent and never changing, right? Like payments is payments is payments, and that makes sense. But on the other hand, like the modality and the like actual experience of payments is changing a lot. I'm teasing a little bit the next topic we're going to talk about, which is AI. But I'd just be curious broadly. I mean, you've mentioned consumer, commercial, credit, debit. I know you guys do stuff around BNPL. Like, how do you think about abstracting the specific payment mechanism from the underlying like problem the customer is trying to solve?
Exactly what you just said. So first, what kind of experience or problem are you trying to resolve? So like a lot of our customers in the delivery space, right? So we work with Instacart and DoorDash and Uber, and the big value proposition we saw for them was removing driver fraud. So using our technology to eliminate fraud. Some customers will use our platform to drive scale. So the original use case we served in Buy Now, Pay Later was actually eliminating the need for the Buy Now, Pay Later company to connect with each and every one of those merchants. And so instead, what happens is when you're checking out, the user is going through a user experience, but actually behind the scenes, what's happening is that Buy Now, Pay Later company is using our platform to pay the merchant on your behalf. So that's to solve a very specific problem that actually the user may not even understand is happening, but you have to live within the confines of how the payment ecosystem operates. And so a lot of our value is by first listening. So what are you trying to accomplish? And then we use our experience and expertise to say, okay, let us think about an interesting way to solve that might be unique. And we have the ability to do that because of the flexibility and the kind of modularity of our platform. That is really interesting, actually. And I like both of those examples a lot because, as you were saying, the payment experience is totally different, right? Like it doesn't feel to the consumer like they're using a card. It shouldn't feel like they're using a card. But you guys being able to be the bridge between the infrastructure that powers all of this stuff, a lot of which runs on the card rails and sort of requires specific ways to kind of tie together, you guys can handle that in the background to address specific pain points, while at the same time, the consumer experience is just as seamless as it was before. That's right. I mean, a consumer right now goes into the DoorDash app and orders food, and it shows up at their house, and they don't need to concern themselves with
the fact that there's a virtual card somewhere there.
All the complexity that might be going on behind the scenes to deliver that seamless experience to them. But that's the way we want it, right? That's exactly by design.
No, well, it's funny you say that because I feel like in some ways, the more seamless and sort of almost invisible payments becomes on the front end, the more complicated it becomes on the back end. And I think that, I mean, as you were saying, you guys have sort of the accumulated like wisdom and experience of having enabled this to know that like, it's going to be a little complicated on the back end, but this is how we're going to kind of patch these things together. This is how all these pieces are going to fit. And I bring all of that up because obviously we're at Money 2020 in 2025, which means AI is everywhere. I think I got pitched 9 different AI solutions just walking over here to record the podcast. So I'd be curious to get your take on, I know you spend a lot of time on agentic commerce and thinking that through, but kind of like what we were just saying, the agentic commerce on the front end, the vision is like, let's make this even easier for consumers or business owners. But on the back end, like that probably even increases beyond where we are today, the potential challenges that need to be solved for, the things we need to think through. How do you think about agentic commerce kind of broadly and sort of what some of those challenges are we need to solve for?
Well, first, I would say that our customer base are innovators and are typically pushing the industry forward. And so that gives us a unique seat to be working on these challenges at the forefront of the very first companies that are trying to tackle them. I was going to say, like the ones who are working on agentic commerce probably called you guys pretty early in the process. So that gives us a unique perspective. The other thing that's also unique is that we bring the issuing perspective. So a lot of what you're seeing when people are talking about AI and agentic right now, if you really pay attention, what you'll see is it's very merchant or acquirer driven. So it's very focused on the other side of the ecosystem versus our perspective comes from issuing. And what we're talking to our customers about is if I, as a consumer, wanted to make a purchase or a small business and I wanted an agent to help me do that, why wouldn't I come to the the app or the provider who gives me the ability to make payments. To actually start from the issuing side is the way we're thinking about things, which is actually quite different. Now that I've said that, when you go out and you start looking, you're going to find that actually a lot of the discussion is being driven by the other side of the ecosystem versus what we're focused on is, okay, how would I, as a payment provider, enable an agent to shop on the user's behalf that gets started from their perspective? And that's a lot of what we're focused on.
That I'm glad you mentioned that. And I think that actually is going to change my entire lens when I'm looking at the space. So I appreciate that because I've been kind of intuitively grasping onto that same idea, which is that agentic AI and agentic commerce, they talk in AI a lot about the concept of alignment, right? We want to make sure we have alignment. But one of the challenges with payments, and we were talking about this before we started recording as well, is it's very rare to have complete win-win-wins in payments, right? To a degree, you are navigating between different parties with different interests, and you need to find a good equilibrium between those. And from the consumer's perspective, they're going to have a different set of concerns and a different set of objectives than a merchant will or that a merchant acquirer will. So when you're talking to payment providers who are interested in trying to enable this agentic experience for their customers, what are some of the things they're prioritizing or they're focused on?
So first, how do I first get the consumer comfortable? So I think a lot of us who might be in the industry or are more tech-oriented, say, oh, how do we get there faster? This sounds really interesting.
This kind of feels normal to us in a way.
But for a lot of people, payments, they worry about fraud and they worry about, their credential being compromised. And
this was e-commerce back in the day, right? The reason was, I guess PayPal was an early innovator here. They made it feel safe. That was a huge step forward.
And that's always a huge part of payments. It has to work every time, and the end user has to feel that their security is being maintained. So I would say that's one of the first things so how do we get the user who's going to make that payment? How do they feel safe and secure? So for example, one of the things we talk about internally is that you might not send that agent out with your card on file. You might create a virtual card that you funded, that you would fund, and then you use what we internally would call card controls to configure the card very specifically. So I'm giving you very specific instructions on what I'm asking you to purchase. And I'm creating essentially a credential that can only do that. And so there's no way for something else to happen that then exposes you to, even if your bank ultimately ends up reimbursing you, that still might create a lot of hassle in going through the process. So I think that's one of the first things that comes to mind. And then and so one of the areas we're really focused on in terms of how we're applying AI is in risk and fraud management. So, AI can do things just much faster pattern recognition than something that's more rules-based. And so, that's an area that we're investing a lot. The second area that we think about and where we think things are headed is a lot of other components of your life that technology has made its way into. A big part of that evolution has been personalization. So with technology, there can be personalization. But if you look at in payments today, rewards are not personalized. So if you and I and a million other people have the same card, the value proposition is exactly the same. And we don't think that has to be the case. So we have built a dynamic rewards engine that would take information. So if I'm a digital platform, I already know a lot about you based on what you do on my platform, maybe what ads you've clicked on in the past, et cetera. And then if you also then use my co-brand, I have information about where else you shop and other things you've purchased. So I should be able to deliver you something very compelling that you would find quite valuable. And that might be different than what they would offer me. And so this is another area where we want to apply AI because it can allow for each user to have a card, but it really feels like it's a card that was made for them. And, no different that when you shop in e-commerce, a lot of times, you put something in your cart and that site might say, well, people who bought that also bought these other things.
Right.
So why doesn't
rewards work that way too? Yeah.
Rewards work like that.
Yeah.
Or if you're in retail and you already have sort of markdown cycles, right, as you manage inventory, why wouldn't you start with your most loyal and best customers to say, well,
Totally.
for the next 2 days, if you buy these things, I'll give you 10% off, 20% off.
Right.
And so that ability to do that through your card in a very dynamic way is something that we think is very exciting. And again, taking AI from an issuing lens, rather than a merchant lens.
Well, it's fascinating because I think you're right about the personalization, and I think a lot about the changing nature of like competition in this space too, right? Because I'm sure you guys have seen this. Marqeta has been a big enabler of this, but like there's just a lot more competition in payments than there used to be, right? And I do think that, to your point, payments is one of those games where you can try to win with scale, or you can try to win by better serving the customer, right? And I think that the more competitors we add into the market, the more, companies are going to have to try to win through personalization or through like finding a better niche for serving their customers, not necessarily just beating, the biggest issuers in the world at scale, which is a hard game to play.
That's right. And once you have scale, you have to think about being able to read real-time data signals and how quickly can you respond. So it becomes the modern nature of the platform and how it's constructed becomes very important, because before it used to just be how quickly, when an auth message comes to you, how quickly do you approve and there's no latency. But if you start talking about something that's more dynamic and real, now you have to be intaking real-time data and responding very quickly, in milliseconds time. That is a very different kind of capability. And you might have to build your platform in a different way in order to accommodate that type of experience. Yeah,
no, absolutely. Well, on that note, I know one of the things you guys announced recently was an MCP server, a model context protocol, specifically focused around some of these areas. Can you tell us a little bit more about that?
For sure. So we're talking to a lot of our customers, again, who tend to be more innovative than most card issuers. And they are all looking at how could I potentially incorporate an agent into the experience who could then go out and make purchases with some direction given by the user. And so, what an MCP server does is really allow for that bridge for that sort of agent to then connect with Marqeta APIs and do it in a very unique way. So for example, we talked already about issuing a virtual card. So you could, through that server, then an AI agent could create and configure a card with very specific instructions from that user in terms of what it wants to go purchase. Another area is that AI is being applied a lot in the payments ecosystem is in customer service, right? A lot of, and not just in payments, a lot of other industries now, you start in a chat, or, you might get to someone on the phone eventually. But a lot of times you're going to start in a chat, which then means in this day and age now, that means that there's AI behind that. And so disputes and chargebacks is a big part of everything that happens in terms of the security that goes around with a card payment. And so that would be another area that we want an agent to be able to fire off a chargeback, because the consumer might not be talking to a human being when they go to initiate it. And so that's another area that we're focused on with the MCP server.
Well, and that's a good example, again, of what you were saying before, where taking the kind of issuer lens is going to lend itself to looking at problems differently, right? I mean, the way that the merchant or merchant acquirers will look at like chargebacks or returns is just very different in a lot of cases than the way that the consumer issuer payment processor perspective will look at it. So it's different.
Yeah, because majority of the time the user starts with the person who issued them the card, as opposed to going to the merchant first.
Right.
So that becomes a very important part in the way service is happening today, a lot more of it is tech enabled and automated.
Yeah.
So therefore, that's a very important use case for us to enable through AI.
Yeah, it makes sense. And I will say the other thing I like about just the way you're thinking about it is this idea that we can sort of, to a degree, bind the user's intent when they're like in a chatbot and they're like kind of saying, this is what I want to do, to translating that to very specific requirements encoded into a virtual card. That's really cool, right? Because like, I think everyone's had the experience of using AI and it's brilliant one moment and then it screws something up very basic the next. And like, I think about it in the context almost of having an intern where it's like, I want to have the intern do things, but I want to give it very specific constraints so that I feel comfortable with what's about to happen. And it sounds like with virtual cards and some of the stuff you guys can do behind the scenes, you can sort of take the probabilistic nature of how these models work and kind of bind it to very specific constraints that sort of create that safety.
That's right. And that's where our scale and experience comes into play, because a lot of where we get many of these ideas or where they were showcased early is our leadership in expense management. So if you think about one of the things that's differentiated us in the expense management is what I tend to call the trust scale. So if we completely trust you, then the company that you work for might just issue you a corporate card and there's no restrictions. But a lot of companies find that creates a lot of risk for them. So what they might say is, well, okay, we know you're going to be here in Las Vegas from Sunday to Tuesday. I'm going to push you a new card to your digital wallet. And it only works in Las Vegas and it only works in hotels and restaurants and no e-commerce, no transactions over $500. I can limit the functionality of that card to meet what should be the only needs you have while you're on that trip, and eliminates the risk of other things happening, right? And then there are situations where a customer says, well, actually everything should just be a single-use virtual card. So essentially the authorization comes to me to approve before you can buy anything. And so all these were things now we've been doing for many, many years, and a lot of our largest customers in that space are utilizing effectively. But all that is applying also to when we start thinking about agentic commerce. We say, okay, these are some of the experiences and lessons that we can apply because there's some commonalities there.
Well, yeah, I mean, it is like this kind of advanced pattern matching of like, oh, we've actually seen this problem before and we've solved this problem before. It looks different, but now that you've said it, I'm not going to be able to stop thinking about AIs for agentic commerce being the employee being sent to Las Vegas and needing to like wrap the right parameters around that. Like that is exactly how these AI agents need to sort of be thought of. So I think that's great. I want to wrap up by talking a little bit about what you're seeing through your customers and through your platform and the kind of what that tells us about the broader economy and what's happening right now. So Marqeta publishes some great research, if folks haven't taken a look at it, that kind of sketches out how both consumers and small businesses are feeling about payments, payment preferences, what they're spending money on. One of the findings on the consumer side, and I think this was actually data generated by your platform that was really interesting, was the growth in BNPL, specifically for sort of non-discretionary smaller purchases. And I was just curious, like from your vantage point, what do you think that tells us about just kind of the overall state of the consumer payments market and just the consumer overall?
What we're seeing in buy now, pay later is that it's just becoming a much more broadly used use case. So it used to be only for certain kind of purchases, larger purchases, or a lot of it was also a certain demographic of users. And now it's really expanded, becoming much more broad-based. And what we're seeing is people are using it much more thoughtfully as a cash flow management tool. So they're applying it in more of a strategic way.
Interesting.
So, what I often will tell people who might express concern that, one of the fastest growing areas of buy now, pay later we hear is grocery or everyday spending. Is that's say a bad sign? But I think that's not what we're seeing, that people are using it much more broadly, again, as a cash management tool. And, a lot of people who may be paying with a credit card today, but not revolving, when they buy something, they also don't pay for it for 30 days.
That's right.
So that is them also applying a cash flow management tool. And so it's not necessarily that unusual. The other shift that's happening that we're really helping power is buy now, pay later started as more of something that it felt like the merchant was offering it to you. It was a bug on the website that you clicked at checkout.
Yeah.
Now what's happening is it's becoming a feature of the card. Yeah. So, a lot of the leading buy now, pay later companies like Affirm and Klarna are now issuing debit cards with buy now, pay later as a feature of the card itself.
Yeah.
And so now what that means is I can use that card anywhere that network is accepted. So anyone who's accepting card payments, which now means it can be applied in almost any type of spend scenario.
Yeah.
And so that's something that we're on the forefront of. And a lot of them you mentioned earlier are using flexible credentials for that. Yeah. And we're the only one who's powering that right now in the US and over the past year. And so that's another thing that's contributing to this growth in other use cases, is because, there are tens and tens of millions of merchants out there, and it's hard to get to all of them. And so now with a shift to, I'm going to make it a consumer value proposition and give you a card that allows you to buy now, pay later on any purchase that you elect, that allows it to expand to other merchant categories.
That makes sense. And I will say that the thing that's nice about that is that when you have it, again, it kind of goes back to what you were saying before, where it's like we take an issuer lens to this, right? Like, what does the payment provider need? What does the consumer need? And that's a very different answer when it comes to buy now, pay later. But I think that you're right. And it does provide more, I guess, kind of control and just more optionality, right, for consumers to manage their cash flow. I also wanted to ask about small businesses, because in that same survey that I referenced, and I'll include the link to this in the show notes for the podcast, one of the findings I thought was really interesting was sort of a growing sentiment among small and medium-sized businesses that they view their payment systems, or the payment providers they use, as sort of a strategic asset and something that they want to invest in. And I thought that was fascinating, because I think for a long time the default position has been, hey, look, I just need to kind of have payments work. I don't want to think too much about it. And it's not until I get to like a Walmart scale that I start to really like care about payments and dedicate resources to it. It sounds like from what you're seeing, both kind of anecdotally and then in this data, that's starting to move down market. Can you kind of comment on like why that is and what's driving that?
Sure. I think for everybody, and particularly small business owners, time is one of your most valuable things. And so a lot of what, as the technology is improving and becoming even more accessible for even the smallest business to have payments more automated, what they're finding is, I used to do this very manually. My expense management, my financial management was a very manual exercise. And for many of them, probably not their strength also, right? They have a certain expertise that their business is focused on.
They're an HVAC installer or a pizzeria owner.
And now they have to be a finance person too, and that can be very hard. So what's happening in the modernization of payments is it's taking all that complexity away and automating all of that, which not only, it just frees them up to spend more time driving what differentiates their business or gets them focused on growth, or streamlining operations, which then is also reduces sort of pain in the operating of the business, or what things that employees might not like and causes a lot of attrition. If I could remove those pain points, then maybe I'd have employees that stick around longer, and that means they're more experienced, which means I can accomplish more things and deliver more value for their customers. So that's really what we see as the primary thing, is all about time. And if I could automate the financial aspects of the business, then that can help me drive my business.
Yep. No, I think that's exactly right. And it's cool to see all of these capabilities kind of coming down market and being put in the hands of the end users. That is a great place to leave it. Mike, thank you so much for taking the time. I really appreciate it.
Well, thank you for having me.